Hey everyone, Lee from Setters Property Finance here. Welcome to the channel and part 2 of our Ultimate First Home Buyer's Guide series. Guys, the steps in this series, including today's video where we're going to be discussing grants, are things we as mortgage brokers do for our clients as part of our service. Like I said in part 1, this process should not be stressful for you. It should be exciting and fulfilling. So please, if you have any questions or prefer assistance, feel free to contact me from the details below. My service is free and I'm more than happy to fill out these annoying grant applications for you. If you're new to the channel, don't miss out, hit the subscribe button and activate notifications to keep up with my latest content. In part 1, we went over assessing your finances, which will serve us as a good base. Today, we will look at grants which can assist you in buying your first home. Let's jump in. To start off, let's look at the federal grants which are available. The First Home Guarantee and Regional First Home Buyer Guarantee are almost identical. The main difference is the amount of placements for each program, and as the name suggests, the Regional First Home Buyer Guarantee is for use in supporting regional first home purchases. These grants provide a fantastic opportunity for you first home buyers. It enables you to buy a home with a deposit as low as 5% without having to pay lender's mortgage insurance. We will discuss LMI in a later video. For now, just know typically you'd need a 20% deposit to avoid paying LMI. This scheme works because the government backs the loan instead of an insurance company, sparing you, the borrower, from the LMI expense. This grant is limited to 35,000 spots for the First Home Guarantee and 10,000 slots for the Regional First Home Buyer Guarantee per financial year. In terms of eligibility, as this scheme is to help assist people get into their first home, you must demonstrate that you are a first home buyer or a previous homeowner who hasn't owned a property in Australia in the past 10 years. For singles, your taxable income needs to be below 125,000, and for couples, it should be under 200,000. When you apply for a spot in this program, you'll be asked to provide the relevant notice of assessment from the ATO for the previous financial year to demonstrate this. You can use this grant in the building of a new home, purchasing an existing property, buying a townhouse, an apartment, a house and land package, or even acquiring land with a separate contract for construction. If you're successful in your application, you're required to move into it within 6 months and live in that property for as long as your home loan remains guaranteed under the scheme. Now, there are price caps on the value of property you can purchase under these schemes, which vary by state and regional metro areas. The price cap range is between 600k in the Northern Territory and 900k in Sydney. To find out more, contact us below and we can determine the price cap applicable for your postcode. To illustrate how these grants work in practice, if you're looking to purchase an existing property in New South Wales valued at 600,000, however only have a 5% deposit of 30,000, you would likely need to pay LMI. If you're successful in your application, the government would essentially step in to provide a guarantee to cover your loan amount in the case of a default. In this example, you would be saving about 24,000 according to Westpac's LMI calculator. The Family Home Guarantee program is very similar to the previous two grants we discussed. However, it is designed to assist a single parent with children get into a home with reduced savings. It provides an opportunity to either construct a new home or acquire a pre-existing one by contributing a minimum of 2% of the property's price without the need of lender's mortgage insurance. So a little bit more favourable than the 5% required by the First Home Guarantee. Although the goal and property price caps remain the same, eligibility is slightly different to the First Home Guarantee. I'm going to go over just the points of difference as the two schemes are very similar. To be eligible, your taxable income should not exceed 125,000, and income from child support payments is not counted in this limit. The initiative is not limited to first home owners. Individuals who have owned property before can also apply, as long as they do not currently own any property. The government currently offers a total of 15,000 spots for this initiative per financial year. Whether you're looking at the First Home Guarantee, Regional First Home Buyer Guarantee, or Family Home Guarantee, it is important to understand that applications can only be made with a participating lender of the scheme or their authorised representative, a mortgage broker. As for the state grants, there is typically two on offer by state governments: the First Home Owners Grant and Stamp Duty Concessions. The First Home Owners Grant is offered by every state and territory except for the ACT. The grant can support you in your home ownership journey by providing a lump sum of cash towards the purchase of your first home or acquiring vacant land for construction purposes. The amount of assistance varies between 10 to 30k, depending on the state. If you require the grant for settlement, you must lodge your application with the approved agent who is providing you finance. The states also provide stamp duty concessions for first home buyers. These concessions are very different depending on the state. The goal, however, is the same, which is to reduce the amount of stamp duty which is applicable to your purchase. These forms are generally filled out once property contracts have been exchanged. For a full breakdown of eligibility and funding amounts, head to our written first home owners guide, which I have linked in the description below. There you can find detailed funding information specific to your state. Guys, these grants are a one-time opportunity, and to make the most of them, it's crucial to do your research and seek professional advice. Don't let these valuable resources go to waste. Make informed decisions and take full advantage of these grants to kickstart your journey towards homeownership. And remember, I'm here to assist you every step of the way, so feel free to reach out if you have any questions or need assistance. Also, if you haven't already, please like and subscribe, turn on notifications so you don't miss out on part 3 of this series, where we'll be discussing some typical purchase costs to expect when purchasing your home. Thank you for watching. Catch you in the next one.